Hey, what's up, my friends? So in today's training, I want to share with you my secret 4-step trading formula to beat the markets. Now you might be thinking, but Rayner, anybody can claim to beat the markets. Rayner, anybody can claim, to be a profitable trader. I get it. So this is why I want to show you my equity curve, right, from my own live trading account with Interactive Broker. You can see that since 2019, my account is up about 107%, right, over the last 3 years, whereas the S&P 500 is up about 48%. Okay, so you can see over here, right, this is my own live trading account. This is the equity curve, and you know that I'm not trying to smoke you, but rather I have, evidence and my own results to back up what I claim. So in today's training, right, it's not just about me, because you will also learn, right, not only the 4-step trading formula to beat the markets, plus a very simple stock trading system that you can use, right, that has generated 2,107% over the last 22 years. Ready? Then let's get started. Okay, so the first part of the formula is this, right? Read books, right, with backtested results. Now you might be wondering, why, Rayner? Why do this, right? So here's the thing, right? Whenever authors, they write books with backtested results, they usually have, agenda or purpose behind it. For example, it could be to improve their branding or to help them sell more courses, subscriptions down the line for their whatever business, like me, for example, right, to help me sell more courses down the lines. Or maybe people who run hedge funds, they write books, people will learn of their funds and maybe eventually put money and invest with their hedge fund. So you can see that whenever authors, right, they write trading books, they usually have a purpose behind it. And if you think about this, right, no sane author, no sane trader who write a book, right, will want to write something that doesn't work, because it's going to take a huge hit to their reputation, right? No one with a sound mind will do that. So this is why reading books with backtested results is kind of like your shortcut, right, to finding trading success, because traders, veteran traders, experts, they have already been through it, right, and are pretty much, sharing what is working, right, in the markets, right? So now you might be thinking, but Rayner, there are hundreds, there are thousands of books out there. How do I, kind of like filter, all these different books out there? So to make your life easier, here are 3 books, right, that you can consider reading. Number 1, Following the Trend by Andreas Kleno. Number 2, Short-Term Trading Strategies That Work by Larry Connors and Cesar Alvarez. And number 3, Unholy Grails by Nick Rex. So you can screenshot this and save it, and you can, start with this part of the formula, right, in your trading journey. Okay, so the second part of the formula is this, right? Extract the concepts. So let me share with you a true story. So back when I was in secondary school, about 15, 16 years old, right, you can see that this is my exam report. I kid you not, right? This is me, Rayner, right, when I was in secondary 4. And you can see that I have failed, right, pretty much every single subject over here, except for this one over here, except for this subject. Can you guess, right, which subject I passed among all the 3, 4, 5, 6, 7 subjects I took, right? The answer is this: I only passed my English subject. So this shows, right, that if you want to be a trader, if you want to be a YouTube personnel, right, you only need English to pass, right, in school, right? So just kidding, right? Don't fail, right, if you can, right? So anyway, I only passed English, right, in secondary school. And if you look back, right, in university, you can see that I actually graduated, right, with first class honors over here, as you can see, right? Again, and this is my name, and this is somewhere in 2011, yeah. So now you might be thinking, Rayner, so what's the secret? Right? How do you go from being an F student to someone graduating with first class honors? So the secret is this: back when I was in secondary school, failing every single subject, right, the reason why that happened is because I was pretty much memorizing all the questions and answers and praying they kind of like come out in the exam. So, I hit a jackpot, right? Imagine you memorize for this question, that answer, and exam come out the same question and answer, and you get it. Oh, it feels really good. So that was what I was doing in secondary school, and clearly it didn't work out for me. So when I go on to university, I know that clearly that concept, that strategy is no longer working. So what I did, right, is I started understanding concepts, right, that are being taught in school. So when I learn a concept, when I learn a principle, the school can change the question, the answer, no matter how. If I still understand the concept, I can still answer that question correctly. So this was one of my biggest aha takeaway, right, that I got away from school, is that don't memorize, questions, answer, don't memorize stuff. Instead, understand the broad-based concept, because this will kind of like help you right down the line, right, no matter, how they change and twist the questions. Once you understand the concept, things, will work out for you. And it's the same for trading, I realized, right? When you extract the concepts, right, from all these trading books that you have read, this is really what matters. So you might be thinking, Rayner, what's the difference between a concept and a tactic? So let me explain what's the difference between the two. So concept is, for example, write a trend. That is a concept, right? You want to write a trend, using a trailing stop loss. The tactic to execute this concept could be something like, use a 50-day moving average to trail your stop loss. So you can see that the tactic, it can always change, right? You don't have to use a 50-day moving average. You can use a chandelier exit. You can use maybe a 25-day moving average to trail your stop loss. There are many ways to trail your stop loss, but what doesn't change, right, is the concept of riding a trend. So Having the concept of riding a trend, there are many ways to execute it, right? You know, using different types of trailing stop loss, different parameters, right? So the concept comes first, right? Then the tactic, right? To, you know, execute the concept. Hopefully, you know, this makes sense, right? Because this is very important. Okay, step 3 is to test the trading system, right? This reminds me of a story back when I was in, I think in secondary school when I was about 13 or 14 years old. We have this thing called neoprints, right? So neoprints is kind of like a sticker, right? Where the person, we can take, you know, a photo at the photo booth, then you come up the photos, right? In the form of a sticker, and you can kind of like share it with your friends and whatnot. So I had this neoprint, right, of this girl that I met. I'm not even sure how I got her neoprint, but, you know, I received a neoprint and I thought, hey, you know, this girl looks really sweet, right? So we were talking, SMSing each other for about 3 to 4 months. And finally, right, one day our schedule, you know, aligned and we can, you know, meet up, right, in person. So we decided to meet at some random arcade in Singapore. And when I was there, right, I felt that someone tapped me on the back, you know, hi Rayner. When I look back, right, I got a shock of my life, right, because that girl clearly didn't look like how she was supposed to look like on the neoprint side. You know, exchanged, you know, pleasantries, hello, bye bye, and that was bye bye forever. I never, you know, meet her ever again. So this kind of reminds me also, right, that when you guys and girls are on dating apps, right, for example, you see the guy, oh, he got 6 packs, but when you meet him, he only got 1 big pack. Or you meet the girl, right, she looks very slim on the photos, but you come up and see her in person, it's not quite as slim. So same thing over here, right? Same thing for trading, right? When you see a trading system that is supposedly to work in the book, right, but when you actually trade it in live markets, it doesn't work. So why is that? That's because you must always test the trading system, right? You never ever, right, trust anything, verify everything, whether you're dating girls, whether you're meeting someone on a dating app, whatsoever. You don't trust those digital pictures, right? You have to see the real thing. So same for trading. You don't trust those rules or whatever strategies people are sharing, right? You have to test it out on your own, right, to see whether it works or not. And this is why later in today's trading, I will share with you a simple trading system, right, that I've tested that has generated 2,107% over the last 22 years. I'll share with you the exact trading rules and much more, right? So with that, let's move on. Number 4, tweak the trading system. This is so important because there's no point, right, giving you, let's say, a day trading system, a day trading strategy if you are someone who have a full-time job, because day trading requires you to, you know, be glued in front of your monitor pretty much all the time. And if you have a full-time job, there's no way you're going to execute the day trading system. It's kind of like, you know, no point driving a Toyota to win an F1 race, because by the time, right, you finish 1 lap, the race is over. Make sense? So this is why you want to tweak the trading system to your needs, to your goals, right? So once you can do that, right, you can actually have a high chance of following your trading rules and to achieve your goals. So with this, right, let's do a quick recap to behind this formula, the RETT trading formula. Number 1, you want to read books with backtested results. Number 2, extract the concepts behind it so you can develop your own trading strategy. Number 3, test the trading system. And number 4, tweak the system to your needs. Now at this point you might be thinking, but Rayner, you know, how do I actually apply all the steps into the real world of trading? Well, that's what you're going to find out right now. Okay, now I want to share with you a proven trading system that has generated 2,107% over the last 22 years using the RETT formula, right? So let's get started. So what does the R stand for in the RETT? R. RA? No, stands for read books with backtested results. So in this example, right, I read the book called Short-Term Trading Strategies That Work by Larry Connors and Cesar Alvarez. Next step, we want to extract the concepts, right? So what is the concepts that I extracted out from this book over here? So let me walk you through. Number 1, I realized that strong performing stocks, right, they are likely to continue higher, especially in the stock markets, right? Because strong performing stocks are stocks which are in an uptrend. They are likely fueled by, you know, consistent, strong earnings, positive sentiments, good, you know, management whatsoever, and they are likely to continue higher over the next few weeks or the next few months. So this is why strong performing stocks are likely to continue higher. Number 2, stocks don't go up in one straight line, or rather any markets that you see, right, it doesn't go up in one straight line, right? When the market is in an uptrend, it goes up, pulls back, goes up, pulls back, goes up, pulls back, and then goes up higher. So once you know how the market moves, right, higher high and higher low, you can actually time your entry on the pullback. So this is what we want to do to buy the pullback. And for this particular trading strategy, since it's a mean reversion trading strategy, we're just looking to capture that one swing in the market. So we want to sell the rally. So in essence, right, what we are trying to do over here is to identify stocks which are in an uptrend. Okay, we want to buy the pullback over here, and then we sell the rally up higher. That's pretty much it. That's kind of like the entire concept behind this trading system. Now, from this concepts that you've learned, we need to translate it into rules, right? Rules that can be tested. So let me share with you a simple trading system, right, with the exact trading rules, right? So test the trading system. Number 1, market, we will be trading stocks in the Russell 1000 index. So basically the largest 1000 stocks in US, these are the stocks that we will be trading. So we are going to classify the markets we are trading. Number two, how do we define the trend? So one way to do it is that the stock must be above the 200-day moving average, right? So this means, right, if a stock is above the 200-day moving average, then only then will we consider looking for buying opportunities. If the stock is below it, right, we won't touch the stock at all. Next one, define the pullback. How do we define the pullback? So in this case, we are using the Bollinger Band. We will make sure that the stock, right, has closed 2.5 standard deviation below the 20-day Bollinger Band. So this is how we define the pullback. The stock has to close below the lower Bollinger Band, right? And the lower Bollinger Band is defined by using a 2.5 standard deviation away from the mean, or rather from the center Bollinger Band line. I'll share with you some examples later on. Next one, right? Entry, right? So we not only want the stock price to close below the lower Bollinger Band, right? We also want the stock, right, to actually trade 3%, right, below the previous day closing price. So for example, let's say this over here is the Bollinger Band, right? Let's say the stock goes up, comes down, it closes below this lower Bollinger Band. The next day, the stock must drop another 3%, right? Let's put here minus another 3%, drop down another 3%, right? Before we will get filled on the trade. So in other words, we are trying to buy stocks, right, which are short-term oversold, right? So the stock has to fall another 3% lower the next day, right, before we get filled on this trade. So if the stock closes below the lower Bollinger Band, but the following day it did not drop another 3%, right, we will not be in the trade. So this is pretty much having a buy limit order, right, below the previous day closing price to make sure that we are buying stocks which are short-term oversold. And what about exit, right? Very simple. We are just looking to sell when the 2-period RSI crosses above 50 or after 10 trading days, right? Sometimes if the stock continues to go down lower and lower, right, where the RSI doesn't cross above 50, we want to have like a time-based stop loss. If after 10 trading days, it still has not crossed above the 2-period RSI, we will still exit the trade, right, to cut our loss, right? So next, let me share with you some examples, right, of how this trading system looks like. Now, let's have a look at some examples, right, of this trading system. And by the way, the examples that I've chosen, they're all cherry-picked charts, right, and they're all winning trades. But later on, when you see the results, right, we have losing trades as well. But for now, the trading examples, they're all cherry-picked and they're all winners, right, because it's easier to illustrate the examples. So first thing first, right, this stock, you can see it's in an uptrend, right? I did not add the 200-day moving average, but if you overlay it, you can see that this stock is actually above the 200-day moving average. I didn't add it because I didn't want to clutter the charts with too many indicators. Second thing, the pullback. Remember, we are looking for the stock, right, to close below the lower Bollinger Band. In this case, right, we are using 20-period Bollinger Band, 20-day, 20-period, right, on the daily time frame. And then the standard deviation, we're using 2.5 standard deviation. Okay, so you can see the Bollinger Band settings over here. This is a 20-period and 2.5 standard deviation. So now, where is our signal, right? So the signal actually occurred over here. You look at this candle over here. This is where the stock price closed below the lower Bollinger Band. Okay, so does it mean we immediately enter the trade? No, not quite, because we still need to place a 3% buy limit order below the previous day closing price. So you can see this is the closing price over here, and the next day the stock actually traded slightly lower, and we actually got filled, right, because it actually hit our 3% buy limit order. So we got filled, right, somewhere near the lows. Let me just remove the lines, right? We got filled somewhere near the lows of this candle over here. We have gotten filled on this trade. Now, what about exit? Remember, we exit when the 2-period RSI crosses above 50 or after 10 trading days, whichever comes first. So here is the 2-period RSI you can see over here. And over here, on this one over here, you can see that 2-period RSI actually did cross above 50 on this particular day. On this day, 2-period RSI crosses above 50. So we're going to exit the trade the next day. So the next day when the market open over here, this is where we exit this trade for a small profit. So one more example, okay, over here. This one over here, Plug Power. Again, I did not add in the 200-day moving average, but if you do, right, you can see that this stock is above the 200-day moving average as well. Next one, right? So remember, what is our signal, right? We're looking for a pullback, waiting for the stock price to close below the lower Bollinger Band, which happened on this candle over here. But it doesn't mean that we immediately enter the trade, because we want the stock, right, to continue down lower. That's why we have this 3% buy limit order. So if the next day the stock price drops down another 3% lower, we will have our buy limit order being filled. So that actually happened on this candle over here, right? The next day the stock price did trade down lower by another 3%. We got filled on the trade. What about exit? Again, very simple, right? Over here, the 2-period RSI crosses above 50, right? You can see right now it's 71. This candle here, the RSI is currently at 71.9. So this means that next day when the market open, we will sell this stock, right? And possibly for a profit as well, unless, you know, the market kind of gap against us. So this is how the trading setup, the chart examples look like, right? Including the entries and exits. Now, what about results? Earlier I mentioned, right, these are our cherry pick charts, but in the real world of trading, you have winners, you have losers, and I'm not going to hide it from you. You can see this is the back-tested report. Okay, so over the last 22 years, this one has generated about 2,107%. In terms of annualized percentage return, is about 15.1% annual return over the last 22 years. Winning rate is about 67%, as you can see over here for this system, and maximum drawdown is about 23%. If you're interested in all this data, you can just pause this screen and, you know, analyze all this data, or better still, go and test this trading system on your own and see what you get, right? That's the hallmark of a professional trader. Okay, so moving on. This is the equity curve over the last 22 years. You can see that I backtested it from 2000 up to 2021, still, you know, making new higher highs and higher lows. So this system clearly is still working, right, even in today's market. Next one, tweak the trading system. As mentioned, right, there are many ways that you can tweak the system, right, to suit your needs, to suit your goals. So to give you some, you know, ideas, right, what you can do. Number one, you can do is, could you consider trading this concept or system on other markets, maybe on the S&P 500, maybe on the Australian markets, maybe on the Singapore markets, the Philippine markets? Could that be possible? Well, test to find out. Next one, different entry trigger. So we use this, in this case, we use the Bollinger Band, right? When the stock price to close below the lower Bollinger Band to define as our entry trigger. But that's not the only way. What if you use, let's say, the 15-day low, the 20-day low? What if you use a percentage, you know, drop in price? The stock price drop, you know, 3% for 3 days in a row. There are, you know, other ways that you can define the pullback, right, in your trading system. Or how about this? You can hold the trade longer to capture a bigger swing. So maybe instead of, you know, waiting for the 2-period RSI to cross above 50, what if you change it to 5-period RSI to cross above 50? This way you're, you know, holding the trade a bit longer to capture a bigger swing. Might that be possible? You have to test it to find out. And by the way, right, if you have enjoyed today's training, right, then I'd like to invite you, right, to an upcoming event called Stock Trading Secrets. During this event, I'll share with you another more powerful trading system, right, that has generated 3,225% over the last 22 years. I'll share with you how you can take a small trading account, right, to grow it into 6 or even 7 figures and beyond, right, using, you know, proper risk management so you don't blow up your trading account. Plus, I'll share with you the secret, right, to profiting almost every single year from the financial markets, even during a bear market or recession, like what we are experiencing right now. So if you're interested to join me for this free upcoming web class, just go down to this link over here, tradingwithrayner.com/STS. The link is over here. I'll put somewhere in the description below so you can access it easily. Then just fill up your details over here, name and email address. Then there's this orange button. You just click on this orange button and you will be registered for this free upcoming web class. I know the next one here is on 26th of June, but if you're looking at this video, which is really July, August, no worries, because I try to host one of such event every single month, right? So just come to this, register, and I will see you at this free upcoming web class. I'll talk to you soon. Take care.